We got the 2-year Treasury yield shooting up around 4% yesterday, guys. Now, this is marking the highest it's been since 2007. Garrett, if Treasury yields keep getting higher across the board, what does it mean for the economy?
Well, at the end of the day, this is a really good opportunity, a reminder that you should probably be looking at the bond market right now. There's a lot of good companies out there that are paying 5 to 7% through 2024, and they are not going to be going away. And I'm talking about companies like Ford or Icon Enterprises, but the economy itself. I mean, I think this is just one of those classic events where you continue to have a conversation about borrowing costs. The bond market continues to pull everything higher. It is very, very clear that the Fed now is at that 4.6 target rate. They're probably going to leave it there longer for what the market expects. So again, higher interest costs create multiple scenarios. One, it aims to slow down consumer spending. Two, it's going to impact business investment. And three, the one thing I think Shah said it yesterday is, where are we going to get into black swan territory on some of this stuff? Because as we have seen, when Treasury yields increase at the pace that we are at, and we are at the fastest pace for interest rates moving from effectively 0 to 3%, ever. Go back to 87, go back to 94, go back and look at all the different periods. Every time that we have moved this high that quickly, there has been an event somewhere around the globe. 94, the tequila crisis, 2006, housing crisis, dot-com bubble on the back of the 99, 98 hikes. You had 2018 hikes. Those hikes created the biggest downturn for global assets since 1900. We don't know what the unknown is. Now, we could sit here and we could talk about the impact on credit and consumers. I'm worried about what I don't know about. And I think that's the thing we have to be ready to prepare for. And I keep saying it, that real big significant event, if and when it comes, momentum will already be negative. So think back to what happened in 2018, late 2018, our momentum indicator was negative. Think back to COVID 2020, momentum went negative on February 23rd. So we will be out. And we will wait around and we will watch to see what happens. There are things around the globe that I am not prepared for, and I know that a lot of other people are not. I don't know what they are.
When Garrett says black swan, everybody, you need to listen. And like you said, Garrett, momentum's already going to be negative. What?
Shah said it first. He said it yesterday.
Okay. Well, then let's bring on Shah then. Shah, how can investors protect their portfolios getting pulverized by this economy right now?
Yeah, the tough news is if they're still in positions that they should have gotten stopped out on. I'm a 100% advocate of using trailing stops, especially in bull markets. When you start to come down, you should be out of your positions. Taxes notwithstanding, you got to pay the tax man. If you have to, you're doing the right thing. To sit and watch the market go down here is really problematic for long-term investors. The only thing really they can do, if they're going to continue to hold on, and me, I sell. If I have a loss, I sell. I want to revisit what I'm going to do with my capital. I'm going to look for opportunities on the downside. But if investors aren't willing to sell, then you should certainly be buying puts or put spreads on your positions, on your stocks. That's the only thing that they can do. It's the only thing left for them to do.